gold producer here on session 6, and it's Argonaut Gold. And we will be joined by Pete Dougherty. He's president and CEO of Argonaut Gold. I really appreciate you joining us this morning, and thanks for running us through your presentation.
Kai, thank you, and it's a pleasure to be joining all of you this morning. We'll be walking through the presentation this morning, and as we do so, I'll be sharing my screen with you. As Kai said, Argonaut Gold is an intermediate producer and developer here in North America. Today, I'll be sharing with you many things that we have on the go, and what could and could not happen to the future with the company, as we really see an exciting and breakout year this last year and one coming up. So again, as I said, there will be forward-looking information. It is based upon our best knowledge as of today, but as I said, it will be looking forward into the future as to what could and could not happen. Now, Argonaut Gold has been in the business for 10 years. We are a North American focused intermediate producer. We will produce from 4 operating mines, 1 here in Nevada and 3 down in Mexico. From those mines, we'll produce between 200 and 250,000 ounces of gold this year and generate back to the balance sheet roughly around $135 million in today's kind of gold price environment. We also have 2 very exciting development projects that I'll spend a bit of time on. There are the Magino Project, which is located in Ontario, Canada, which we have just green-lighted to go into production. This is a 5 million ounce deposit and growing. And then we have the Sara de Gallo project down in Mexico in Guanajuato, which hosts roughly 3 million ounces. And we are in permitting on that particular project. As I said, Argonaut has a long history. We have been in this business for 10 years, produced 1.4 million ounces at nearly $800 cash cost. We have about $215 million of cash on the balance sheet, and we have an untapped revolving credit facility for an additional $125 million. Now, our vision and strategy for the company is pretty simple. We are transitioning from a high cost, short mine life producer of 150 to 200,000 ounces a year to a lower cost intermediate producer generating 300 to 500,000 ounces a year with longer lives and lower operating cost profile. Now, underpinning this strategy is a 3-phased approach. It's harvest, replace, and grow. Harvest is simply taking the assets that we are running today, generating the most free cash that we can. In the last 3 quarters in a row, it's nearly been $25 million worth of free cash added back to the balance sheet each quarter. Replace is to look at the short mine lives and replace them with longer mine lives and do internal drilling to extend those lives. And then the growth side of this business is exciting. Today, there's over $1 billion to be unlocked in the growth assets that I'll speak about. So let's dive a little deeper in first on the harvest approach. When we look at harvest, we are operating assets that are all low grade, open pit heap leach mines. 3 in Mexico and 1 here in the US. As I said, during the last 3 quarters, these projects have generated roughly $25 million a quarter in free cash flow. That has allowed us to continue the development phase that's going to build out this company for the future. Now, 2021 should yield us between 200 and 250,000 ounces of gold at about 1,250 to 1,350 all-in sustaining costs. As I said, that'll put roughly $135 million back on the balance sheet in today's gold price environment. Now let's move forward to the next, the replace mode. As Kai talked about, we announced the Alio transaction last July. Upon announcement in March, it was valued at roughly $47 million. Upon closing in July, it rose to $113 million. Now, since acquiring those assets, we are unlocking additional value henceforth. Today, the analyst consensus for the Florida Canyon mine alone is over $260 million. And then when we look at the Ana Paula asset, as we saw a great asset, great jurisdiction, the problem was we had other assets that we felt were even higher quality than this, and we wouldn't get to this project for 5 years down the road. We thought selling this asset to somebody else who could develop it and move it forward was the smart thing to do. It allowed access for our shareholders to an initial upfront cash payment, as well as some downstream carry in this particular project as we look towards the future. So now looking forward to phase 2 of Replace, the Florida Canyon Mine. When we purchased the Florida Canyon Mine, we didn't buy it for just what we knew then and there. It was going to be a 10-year life, which is fantastic. That would be one of our longest lived assets running today in production. But what we saw was the potential to lock even more value in. First, I show you this slide, and there are 2 photos on it. First, the upper left-hand photo. This represents the Florida Canyon Project. Now, when we look at the Florida Canyon Project, the red represents mineralization, the black represents the drill holes. The gray, we just don't know enough information about. We saw great potential to expand the resource known in the area. And the best place to find gold is where you found it in the past. This project today is slated to produce between 75 and 80,000 ounces a year over 10 years. And we think there is tremendous exploration upside here. We kicked off a first drilling program at this project in October of last year. This was the first real intensive drilling program that has been carried out on this property since the mid-1990s. So we think there's tremendous upside. And that's not all. When we move to the right-hand side of the page, you'll see the Florida Canyon Mine at the upper end of the arrow, but 10 kilometers away, we host also the Standard Mine. The Standard Mine was run in the 90s and produced roughly 600,000 ounces of gold out of the pits. It has still 140,000 ounces left within those pits to be mined. We are going to be drilling on that project again this year as well. And hopefully at this time next year, we're standing talking to people about a completely revised Florida Canyon operation, maybe one that's bigger, maybe one that has 2 mines coming online in the future. So we're quite excited about what Florida Canyon can do for us. So let's move to the next slide, the growth phase of the company. This is exciting, and a lot of people are following us because of what this can do. We talk about a transformational opportunity for the company. We have it in spades within this company. If we look at our current operations from 2020, you would see us producing roughly 200,000 ounces a year at an all-in sustaining cost of roughly $1,280. I'll step to the first of our development pipeline. That is the Magino Project. We green-lighted this project to move forward this year, and we're spending money to bring this project into production. In the first 5 years of operation, it will generate 150,000 ounces a year at $700 all-in sustaining cost. Now that clearly is transformational for us as a company. But I submit there's more there, because that study that we have completed says that we'll take the first 2 million ounces and that'll take us 17 years. We believe that there's 5 million ounces already identified and it continues to grow. And therefore we see the possibility of creating a much larger project, something that could be producing from open pit and underground and producing 300,000 ounces a year in the future, and not that distance of a future. And we'll talk about that. Now that moves us to Sara de Gallo. This is another project down in Guanajuato, Mexico. It's right down the pipeline of what we do. This is open pit heap leach. The grade is nearly double what we're operating with at our other projects. It will produce around 75 to 80,000 ounces a year, again, at a very respectable under $700 all-in cost. And the entry point, very attractive at $134 million. So let's dive a little deeper into Magino, because that's the project that's in construction today. It has a 2-year construction window. But whilst that's going on, we'll continue to drill at depths underneath the pit, because all our mineralization has been found in the first 300 meters of this project. We'll complete an expansion study that says, let's start at 10,000, but what could the future hold at 20,000 ton a day? Could we pull in some of that other 5 million ounces and push up that production profile? We'll complete an expansion study and incorporate the underground work that we're drilling on right now, all with the goal of pressing the green go button for production in Q1 of 2023, and also pressing the green go button on looking forward to the next stage of 20,000 tons per day. So let's move forward and look a little bit more to orient the listeners to the Magino Project. This sits on what we call the Goudreau Deformation District. This belt is 125 kilometers from West Dome at the bottom end to Renabi at the top end. Magino and Island Gold sit right in the center of this. On this trend, there have been 15 million ounces found. 5 of those belong to the Medino Project. All of our mineralization known today has been above 300 meters. All of our neighbors have been below where they found all their mineralization. So let's look at what we're doing today to drill deeper beneath the pit. This is a dive deeper in on the Magino property. It is literally a sister and brother to the Alamos Gold's Island Gold Mine. They share the like property boundary. The distance between their operation underground and our deeper drilling is about 100 meters apart. They're down at, as I said before, 1.5 to 2 kilometers in depth. We are looking at all mineralization above 300 meters today and have recently started drilling deeper. As we've tested deeper, we found new zones. And I'll show you now, as we look at a plan view or a longer section of this, look what's happening. We have found an elbow zone, a central zone near the property line. We have now stepped out to the west a little further, found the Scotland, the 42, and the Sandy zone. Stepped a little bit further to the west and found the south zone extending for now underground 1.5 kilometers in distance. We'll show you that here on this slide. We think that phase 2 of Magino is starting to come into light as this deeper drilling is starting to show mineralization conceptually beneath the open pit. And that's what's starting to get us excited. Just as we've seen next door, grades are increasing as we go with depth, and we're starting to get excited about what we're seeing. Here's another look at the south zone that we just recently released and what's happening underneath the pit. As I said, this would be phase 2 for the Magino project, and we're quite excited about what's happening. Next, I'd like to talk about our Sara de Gallo project. Again, this is an open pit heap leach down in Mexico, something we're doing every day in and out. A low entry capital point of $135 million. Again, just like Magino, a 3 million ounce resource. We would be starting with taking the first 1.5 million ounces that will take us 15 years to process. We think there also exists an opportunity to start small and grow bigger. So start with this 70 to 80,000 ounce a year producer and grow that to be something larger. Tremendous leverage, great investment so far on this project. One that's in permitting today, and we expect in H1 of this year to be having some decision on that. That brings me to our focus today and finalization of my presentation. We're going to maximize the cost efficiencies of these projects and profitability. We'll de-risk and build that balance sheet and transform this company through this simple 3-phased approach of harvest, replace, and grow. Kai, I'll turn the presentation back over to you and the listeners.
No, fantastic. Really appreciate it, Pete. Thanks for running us through that. It's really exciting, especially the exploration upside of Magino, I think is tremendous there. I have one follow-up question. Like, what's your total budget for 2021 actually, and how well are you financed for it?
Our total budget for capital spend for the year at the Magino project is going to be close to $200 million at the end of the day. When we pull all the spending together, there's about $12 million going into exploration works as well as the construction of the project this year.
Fantastic. Pete, we got to move on in the program. I really appreciate you joining us. We will have a few questions here in the chat. I know there's been some activity and some chatter. I've been getting some messages here on the side as well. So please stay around. And I know Dan is in the chat as well. Really appreciate you joining us. Get well with your hand. I hope everything's getting better.
Okay, thank you. Bye.
Thanks for joining us, Pete. Really appreciate it.